welcome to Reimagine 2020. I'm Yonah Hochhauser, and today I'm joined by Joe Saz, CEO of Embily USA. Joe, thanks for joining us.
My pleasure. Happy to be here.
Now, for those who don't want to know why the hell we're wearing masks, it's Halloween, and also we're ballers, so that's why we're wearing these masks. But Joe, it's exciting times right now. That's me. It's exciting times right now. PayPal just announced, for those who are watching this on Halloween, happy Halloween, everybody. We're actually recording this before. PayPal just announced they are allowing the buying, selling, and holding of crypto, and that has sent Bitcoin skyrocketing. It hit above 13. Now it's around $13,000. What are the markets showing right now?
Yeah, this is the thing. There's definitely some bullish activity going on from a fundamental perspective. We have news like PayPal. We have basically a new OG, right? Sailor coming into the space and making poems about Bitcoin. There's tons and tons of things going on in the space, and this kind of answers one of my most important questions about markets: where is the money coming from? And now I think we can justifiably say FOMO, white collar institutions, investors, whatever. PayPal, this kind of news is stimulating and exacerbating that FOMO. So, there's so many reasons I think fundamentally this time around, as opposed to say, in the past when we've talked April 2nd to 3K to 14, there just wasn't the fundamental reason to be bullish there. Now everything is just, the doors are opening for Bitcoin one after another. It's beautiful.
Right. Yeah. And do you think that is this just, kind of an overreaction to the good news that we hopped up and it's going to come back and correct, or are we here to stay and only onward and upward?
So I would take a quick note of how we moved up this time. It did seem pretty, if you look at, if you want, I'll just take a quick pop into the charts. And I'll show the quick difference of how to look at this, okay? A lot of people looked at something like the daily chart and see this gigantic green candle that just goes flying through the sky, right? But if you actually look at this on a small time frame, this was actually quite a grind. We did have some vertical action to really kick this off. We had some pullback, some profit taking, and of course, a little bit of a vertical move, but it's just been grinding and grinding. So what would I prefer to happen? The grind for buyers to really put the energy in, put the capital in, and take Bitcoin at whatever price they can, and really express this kind of emotional style of buying that shows that people are going to take Bitcoin and sellers get out my way. I think there will be a pullback, but not right away, not as a result of this news just kind of falling off into the void.
Now, I know you, Joe. I've been speaking to you and interviewing you for a long time at Block TV. But for our viewers who don't know you here, you want to give a little background about who you are and how you got into blockchain?
Absolutely. So Joe Saz, pleasure to meet everybody, and of course, always great to see you again, Yonah. So I got into the space in my first Bitcoin ever bought was July of 2015, but I was a total noob, but kind of just knew about Bitcoin then. 2017 comes around and I was, going back to school, took an economics course, and it said as the price of the superior good goes up in value, the demand for the inferior good goes up in value. And that stupid little concept is why I got into alts. So I stack up a bag of alts and I get out, and I research and I get obsessed with, crypto and Bitcoin after a month or so. And that began my journey into not just, understanding the space, but wanting desperately to remain attached to it, and a technical analysis and obviously education and educating others is what kept me here. And I've had the honor of being, able to do so for the past, 3 years.
And we often hear, at this conference, Reimagine 2020, we often speak to, industry leaders who are working on projects and protocols and DEXes and exchanges, but very infrequently do we get to speak to traders like you. So I'm excited, to give you the opportunity to kind of, give your side of the story, your trader's take, if you would, how is it being a crypto trader? Because I know it could be, there's the ups and there's the downs. It could be wild. How do you sleep at night? You know, knowing that your money could be gone like this, or you could wake up a rich man and retire.
Well, I'll tell you what. I mean, it's very difficult. I often say you have to be the water and you have to be the ice. You know, Bruce Lee says, "Be like the water." You know, take whatever form, and that you got. So in one sense, the market's going to present to you information, and you have to be the water, dissect that information with a level head, and hopefully, in between those trades, get some sleep at night. And of course, the longer you've been doing it, the more you develop that ice. You know, that emotional kind of inability to feel sensitive to what the market's doing. Of course, I'm excited Bitcoin's going up in value, but I'm not, throwing all my capital into a pump. You know what I'm saying? It's I'm not going long, like crazy, or 100xing or 50. So what does get me to sleep at night is knowing that I have a relationship to this asset, my years of trading it. And I mean, it wasn't like that in the beginning. I'll tell you what, there were 3 days without sleep and food, but nowadays it's a little more calm, less risk, so I'm not necessarily looking for that trade that's going to make me retire, all the time. Now it's about let's manage our money, and let's do some sound strategies.
When we're talking about losing sleep, I mean, that's one of the biggest differences that I don't think people really think about when it comes to crypto, is that traditional markets, the exchanges, they're traditionally open from 9 to 5. And then for all intents and purposes, trading is closed afterwards. There's after markets, but trading is closed. In the crypto sphere, it's 24/7. So how does that change your trading strategy? I mean, do you just have to always, before you go to sleep, you set all your sells and you set all your buys, and does that change your strategy a lot, the fact that it is 24/7?
Yes, most definitely. And I'm also famously, or like, my style of trading is short term. I'm not like, I wish I had more skills in swing trading, daily, weekly kind of stuff. And clearly you can have those skills and from short term time scales and trading them, but it's my skill is kind of in that little niche, and I don't go to bed usually. I don't set up a position right before I go to bed. The only position I would set up is if I'm in a position already, then I want to go to sleep with the stop loss. So at least if Bitcoin rips to the upside or something and I'm short, then I'll wake up, I'll be stopped out, I'll have lost money, and I'll probably have made it all back, because Bitcoin is moving at 60 miles and 80 miles an hour these days. It's really not just taking small steps. So if you do get stopped out, let's say you have a short, you're not going to be beaten up, and vice versa. So I do like to take it a little easy, especially considering the global circumstances of us all being students of the market. So there's a lot of defense mechanisms that you need to take on as a trader, especially now, especially with a volatile asset, and especially in a volatile time.
And I know that when I've spoken to you in the past, you've kind of downplayed the effect or the role of like real world news and narratives. You're more focused on the technical analysis of the market. Does that still hold true? Let's say, for instance, Ethereum. Right now DeFi is really hot, and for the most part, it's all powered by Ethereum. Does that change how you trade ETH, or are you just still looking purely at fundamentals?
So I mean, I do a bit of both. As a trader, you have to be connected to the assets that you trade. I think it gives you an edge. So some people say just look at a chart without the ticker, and that's fine, right? But I have a relationship to Bitcoin. I know how it moves. Ethereum, I don't have a relationship to it in that sense. I don't know how it moves quite 100%. I know that it's the second by market cap in the crypto space, so it will behave similarly to Bitcoin in many ways. But as a trader, you have to know a lot of the moving parts that are underneath the numbers in the top end of the watch, or whatever you want to call it, the face of the watch. You have to know that Ethereum had massive gas fee surge just a number of weeks ago. So scaling is clearly an issue. So I don't want to get caught up in something that is pretty much a failure to me, and factually to many others. So I just steer clear of things that I don't want to deal in, and because at the end of the day, I'd rather lose money if I'm trading something that and I'm holding Bitcoin, let's say, and I'm trading Bitcoin relative to Bitcoin or USD. at the end of the day, I'm not going to lose all my Bitcoin. And that's going to be one of your biggest safeguards of if you do manage to lose and need to take a lap and spend some time away from the computer. I would hate losing money to something that was far more manipulatable, or 60% pre-mine ETH, or a sushi swap coin where the founder quoted Charlie Lee essentially and saying, I'm selling this to decentralize the coin and I'm doing it for the community, So that's kind of my position. I stick to what I know and what I love, and that's Bitcoin. But I do keep my eyes on a lot of the other things going on in the market.
Well, so then what's your why do you do it? I'm assuming you're trading end of the day to make money, whether that money be make value, whether that be Bitcoin or dollars, whatever it be. I'm assuming you're not doing it just to buy Bitcoin. I mean, if you believe in Bitcoin, if you believe in it, why don't you just put all your money or put as much money as you need with that you have left to live on, pay your bills, whatever. But why not just put all your money in Bitcoin? You believe in it. It eventually will go up.
Yeah, I'll give you my history there. So in 2017, I had quit my career, which I hated, and I got into online courses. And so as I was doing that, I just couldn't find my passion. And then I made money, buying an asset. That's what got me really into this, and I just it really made me realize that what I was analyzing was not a chart. It was the psychology of human behavior as it applies to the buying and selling of a good, or a service, whatever, however you want to identify any of these assets that you invest in. But that became a passion to me. How do I do it and all that? It was just about trying to find and unlock the key of of human behavior, and that is something that is far more interesting to me than what I was doing prior to crypto. So this is why I chose this path, and it was my way to stay connected to Bitcoin and justify my time, while I should have probably been going to school and maybe buy some textbook definitions, getting a college degree, and doing all that.
And have since we last, I mean, we haven't spoken, in a while. Since we last spoke, DeFi has risen like crazy. DEXes have been seeing massive volumes running through them. Has that changed the rise of DEXes? Has that changed, and the rise of DeFi? Has that changed how you trade?
No, but what it's given me hope, especially when speaking of fundamental news and stuff, BitMEX, right? Of course, they were the titan of and they created inverse perpetual swaps, right? So now they're kind of they were under the scope of the U.S. government. Now they're under the hammer of the U.S. government.
Yeah.
And so the only thing that I would really say I get out of this experience is that innovation will spawn, especially when it's needed, especially at the time it's needed. And so am I really interested in all these DEXs right now and all this kind of crazy stuff going on? Not really, but I am happy to see that at least on the decentralized exchange front, that there is an alternative. Can the U.S. government hit every single perpetual exchange, or every single exchange that offers that, and force them to KYC and force them to XYZ, right? Maybe they can, all right, but can they stop a decentralized exchange if it's a peer-to-peer, whole setup? And the answer is going to be no. So if that does function and it happens to work and people can make it, fine-tune it to the point where it is seamless, then I do believe that we have a really good future for us in Bitcoin, which does aim to circumvent as much capital restriction and government control as possible. So I am happy to see that.
And if we're speaking about government control, then I do want to mention the UK's ban on crypto derivatives. And I know you're plugged in with the trading community, the retail trading community. You're friends with Tone Vays and a bunch of others. And one of the things that really bugged me about that UK crypto ban was that one of the big reasons they gave was they said that retail investors just aren't smart enough to understand these products, to understand this market, to trade. Does that offend you? I mean, I've spoken to you for a long time. Do you think that regulators and governments are just thinking that you're just too dumb and way dumber than you actually are?
Well, this is the funny thing. Of all the excuses they could have used, that was probably the best one. Because the honest truth is, yeah, I'm, you know, maybe not personally one of the ones on the stupidest end of the spectrum, but yeah, there's tons of, you know, a 10-year-old kid can make a BitMEX account and you know, start trading. You know what I'm saying?
Mhm.
So of course, you know, I've of all the stories I've heard, let's say I've heard 100 stories. I could tell you probably 85% of them are failure, I have to go back to work stories, and
Mm,
15% of them are I'm balling right now stories,
mm,
um, and maybe even less, to be honest. So, you know, of all the excuses they could have picked, that's probably the best one. But I think it is also very stupid. They shouldn't do this kind of blanket ban on that service, especially when
yeah.
you have people that are experienced. You know, should they require licensing? No, I think they should. I believe in free markets. I don't think that they're protecting investors by limiting their ability to learn and trade in these kinds of, you know, evolving markets, right? So I think the end goal, or the goal in mind on their side, is more to restrict the ability for people to trade on you know, AML KYC non-compliant exchanges, to you know, make sure that they have their a leash on Bitcoin, or at least the people that are connected to Bitcoin. But I don't think it's going to do too much. And you know, the UK is almost also famous for trying to limit people's speech, you know, and all
Mhm.
these things, and telling people they can't have, you know, certain relations during coronavirus, you know. So
Mm.
I mean, we'll see. I think it's interesting, but I don't think governments are going to be able to leash up the Bitcoin community as well as I think they can.
Mhm. And if not, then they might have another independence, a war of independence on their hands.
Yeah.
Now, now, you know, on the flip side, America, on the
Mhm.
flip side of that, you know, you mentioned that one of the reasons you love it so much is that you're actually dealing with the psychology of traders. That you kind of connected to the market. You have this relationship with the market and the individuals that are trading it. But recently, a bunch of publicly traded companies have put their cash reserves into Bitcoin. You have MicroStrategy, you have a Square, just to name a couple, and more are coming. Institutions are definitely here, and more are coming. How does it affect you as let's say a quote unquote small time trader who you like the human aspect of it? Is the big institutions coming in, the big companies coming in, is that taking away from that kind of human factor of trading, or not?
No, to me, you know, I want to give you the best example I can. So it just means that more traditional methods of trading are entering the market in my eyes. All right. So let's use that breakdown that happened starting kind of February 12th, and that violent crash March 12th. I think it was exactly a month later, if I remember correctly. And the S&P 500 and Bitcoin were running in tandem. You know, it was a
Mhm.
perfect correlation, and I can pull that up real quick if you're interested.
Sure.
Just for the viewers here, this is a chart of Bitcoin in purple and blue, and the S&P 500 in green and red. So you can see the drop, especially like there wasn't necessarily a correlation prior to coronavirus, but right around this February 12th range, Bitcoin started crashing, the market started topping, and then we have a correlated breakdown, a correlated recovery, and just about a correlation, you know, almost all up in between there. Minus the past couple of days where Bitcoin's been shooting up and the market's been coming down. So, um, you know, the back to the original question, would you mind hitting me with that again?
Yeah. Do you feel that all these publicly traded companies in big institutions that are coming into Bitcoin now, more and more, is that taking away from that? You said that human psychology aspect of trading that you love so much, that it was just a bunch of, you know, people who are invested and love this cryptocurrency trading it.
No, it almost means that I could predict more about what people are going to do, because I know that these traditional, you know, investors, white collar, you know, investors, let's call them, they're going to be using some sort of combination of technical indicators. It's not like they're
Mm,
pressing buy and sell, you know,
mm,
and going in without a strategy. So what I have in, you know, to my advantage now is the knowledge that people are using something within the space of technical analysis that then I can try to isolate. You know, if I see a breakout, well, around what range did that breakout happen? Was it by a fib level? You know, was it by a moving average bullish crossover? Was it XYZ? And if I can isolate that, then I have a better understanding of how these traditional players trade the market, and then I can expect, you know, that if we're going to engage in a similar, you know, some sort of technical pattern, then I can have a more predictable outcome. So I actually welcome that, and it's almost, it's the less emotional element will make it more predictable. You know, that emotion, that volatility is what makes Bitcoin swing so wildly. It calming down is going to be, you know, or being traded by people with full-on strategies is going to be, I think, a little more reliable as a trader to for your entries and your profitable exits.
But wasn't that emotion what separated Bitcoin from the traditional markets historically? Was you know, that it was kind of this anarchist type of currency. It was something different, disconnected from the market. And now, if you have these big companies, these regular players, like you mentioned, who are just going to use the same technical analysis, the same trading strategies that they're using to trade the rest of the market, won't Bitcoin now, you know, because obviously they're going to I imagine that they have the big money, they're going to overpower the retail market. Isn't Bitcoin market now going to just look just like everything else, or just look like the stock market?
It certainly is. I mean, it has been, right? So that's definitely could be the case, and that could be, you know, a part of the future of Bitcoin, it trading much more technically, and that being maybe the volatility and that emotional component being unique to Bitcoin. I don't think it's ever going to go away just because we have these, you know, 375 million MicroStrategy buy-ins or whatever. Doesn't mean that we don't have hundreds of thousands of people across the globe still, you know, FOMOing in. It just means that we have that element, and we have FOMO coming in from institutions. And of course, that means that we're going to have more whales splishing and splashing, right? And that also creates a more dangerous game for whales to play. So I almost feel like the more whales you have in the market, the less likely you are to have, you know, serious manipulation in many ways, because, you know, it's not like they're working together, they're working against each other, you know. And I don't know if they'd want to be risking 375 mil on a position and to try to hope that maybe they can, you know, catalyze a little market crash and put in their accumulation zone here. And because what if someone starts buying that up and now they're out and they have to buy in higher? You know, it becomes a very difficult game. And I think the landscape is evolving technically, and I think it'll be a good thing to see this evolve and to get more institutional investors in. And of course, the more people with white hair buy Bitcoin, and the more people with white hair are interested in Bitcoin, you know. So I think it does a lot of good, and it is a scarce asset. At the end of the day, it's a competition. We're always competing to accumulate Bitcoin, whether you're a millionaire or a pennionaire. I don't care. Your Bitcoin is going to be one of the most important assets. It is in all of human history. So you know, I think it's going to be a fun evolution of markets.
Well, you know, speaking of, let's say let's say you're not a millionaire. Let's say you're a pennier. You're a student watching this video, and you know, you're interested in blockchain. You're interested in crypto. You like the future of Bitcoin, but you've never traded before. You have no idea what technical analysis is. You don't know how to read a chart. What do you suggest someone who's interested in this and wants to dip their toe into trading? What do you suggest they do first?
The first and most important thing is have a strategy, and probably and practice that with fake money, paper trade, essentially. A strategy, and I've been speaking to a lot of people about this recently. A lot of people say, yeah, you know, I try to buy low and sell high. Well, of course, right? But the most important thing here is that a strategy, when I say what's your strategy and they say buy low, sell high, no, a strategy is your entries, your exits, most certainly, but your take profits, your stop loss, your double down, you know, your entries, your exits. A strategy includes multiple components, and those decisions need to be made based on something, not just, you know, I flipped a coin. You know, of course you can, but, you know, I would recommend to a lot of people entering the space, get a little bit of background knowledge, at least learn some very fundamental and when I say fundamental, I mean, you know, text, like basic 101 level indicators, you know, like moving averages and what that means and stuff like that. and then you can build a strategy on top of that, you know, and then you can start paper trading it, and then you can start getting familiar with Bitcoin and its volatile swings and such, and then maybe you're ready to start becoming a bit of a trader. But you know, the other thing that needs to be mentioned here is one of the most important things you can do as a trader is also be dollar cost averaging, because Bitcoin is one wild ride, my friend. And you know, you need to protect yourself. You need to keep your head on tight at all times. One I always say, one mistake, you know, can turn to two. But in Bitcoin and trading, one mistake might not even give you a second mistake. We've seen millions of liquidations. You know, we've seen days where Bitcoin crashed so violently it liquidated $200 million of positions, and that's not small potatoes, you know. So I think people need to make sure that they always have a HODL stack. They have money to DCA, and if they're going to trade, it should be with the smallest portion of your portfolio. And and you know, just if you lose that trade money, then you should kind of have that allocation. And if you lose that, wait, you know, don't trade again. But if you do want to trade again, then at least paper trade for another 3 months and then get back into it if you're successful.
And you know, as a trader, you know, how much do you kind of look at the outside world that seemingly isn't connected to the market? Like, for instance, the U.S. presidential elections are about 2 weeks away, give or take. Is that a big factor? Do you think the outcome of the election will sway the market one way or the other?
You know, this is one thing that I have been thinking about a lot, and it's because, not because of the election, it's because of the timing of the election and the media narrative of the wave 2 of coronavirus. Right now, we kind of have two big things going on, and that's what creates a lot of uncertainty to me. If you know, the election, you know, honestly, you know, probably Trump getting elected. He's done the Federal Reserve and Trump have done a lot of things for the market. And as long as the market performed well, I had a strong feeling Trump would get reelected. And let's say that happens, then people are probably going to be excited about the markets for the coming years, 4 years. Now but at the same time, we also have the first, we saw what happened, coronavirus wave 1. It led to things like Boeing collapsing 72% from February to March, right? So I mean, I'm also expecting, you know, a D-Day here where things just get destroyed. You know, there's probably going to be a COVID wave, and I don't think that COVID's the kind of thing where you get a scar from it. It's going to be kind of like a painful thing that happened once, and it's going to be more painful the second time. Whereas certain things create resilience, this probably won't. Bitcoin is breaking its correlation and to the S&P 500 for 2 days though, you know, so can I use that data? No. But I do believe that there is going to be some bullish sentiment if Trump wins, probably going to be some bearish sentiment if Biden wins with his proposed 60 to, you know, percent tax brackets and so on. I think that people are going to be, you know, less incentivized to make money if they're losing all of it, and you know, most of it's going to things that don't benefit the citizen. So I'm concerned about the election a little bit. I'm concerned about coronavirus wave 2 a lot of it, and they're landing right in the same, you know, around the same area. So I think the next 30 days is going to be pretty interesting, and even the next 6 months I do believe will be interesting. But we'll get something big, and probably after that something big, we'll be able to recover. I don't know if it's. I believe it'll be a big down, and that's going to be probably your last time to buy Bitcoin at that kind of price, whether it's 8,000 or 10,000 or 12,000, wherever we end up crashing after that. I think that's where Bitcoin's going to bottom, and this disbelief phase, it's very possible we've been in right before a violent bull market, a properly structured and fundamentally sound bull market. I think this disbelief phase, little pullback, and then that's kind of going to be where we go and start to visit some all-time high territory, maybe get a little cup and handle. Like on a big macro weekly chart, we would get this big kind of something like this, and then a small little, you know, rejection at 20K for profit taking, a small pullback, let's say to 16K or something, and then the breakout that sends us up to 360K Bitcoin for this bull run over the course of maybe a year, hopefully extended bull run.
That would be incredible. So I'm gonna wait for that. I'm gonna wait for that little pullback and then hop in. But one of the criticisms that the stock or the traditional stock market has been getting is its seemingly disconnect from the actual health of the economy. You know, unemployment numbers are still low, obviously because of COVID, and yet the stock market's up until now has performed exceedingly well, even all-time highs in some cases. Do you think does Bitcoin fall in that same boat, or is Bitcoin disconnected from the actual market, or is Bitcoin actually more connected to the actual market by nature?
I would say it's more connected, but this is, you know me, and my hatred of Tether, and so we have the Federal Reserve printing money out of thin air to prop the market, which is very clear and well known, and then we have Tether doing something very similar. So I think that the behavior patterns are going to be parallel in that sense, unless something like Tether gets shut down or whatever the case is, but. I don't think that they're gonna. I think that they're gonna share the boat for a while. I think Bitcoin is a completely different idea altogether. It is scarcity, but it's also money. A stock is scarce, right? But I can't go swipe a card that sells Apple stock for my Starbucks coffee or something. You can do that with Bitcoin. So I think that there's a difference in that sense. Bitcoin is a safe haven, right? Stocks are supposed to be, but if the economy is performing poorly, then they're going to go down in value. So speculators will sell. And on top of that, which I think was a unique market condition, in my opinion, is that we also have a need-based selling. Because like you mentioned, unemployment levels are at their highest. So let's just say a lot of people are probably more desperate to get money. So that will include selling even 401ks with the tax penalty. It'll include selling stocks. It'll include selling gold and silver and Bitcoin. But the question is, what would I rather have at the end of the day? Out of all of those assets, personally, it's going to be Bitcoin. And I think to some it might be gold and silver, to some it might be stocks, but I think most likely stocks are going to be the last thing people want to hold, because it's if the stock market and the economy are two very different things, and the stock market, which people think is the economy, is being held up by it's just literally just kind of stacking cards on top of each other, and it's not going to take much to blow it over. Bitcoin has all the fundamentals to remain strong throughout all this mess. It does have Tether in the background, maybe having done some shit. Maybe it's not manipulating or part of market manipulation in that same Federal Reserve sense currently, as violently as the Fed is doing their version of it. But I do think that Bitcoin is very different than any other asset, and I'm pretty sure if Saylor and anyone else, there was Tudor Jones jumping in, maybe a few months ago. I think people are starting to respect it for what it is, which is far more than just than saying that they want to get involved with it or invest in it. They respect it. You see these tweets from Saylor, and he's saying things I've never heard from these titans of the OG crypto world. I've never heard HODL, certain people that I would look up to, let's say, as OGs. I've never heard them say some of these amazing things, that Saylor is saying. So I think we're entering a very different phase of Bitcoin adoption, psychology, acceptance, or whatever, all these different things, qualities that are going to make Bitcoin so much more sound than it ever has been, fundamentally. So I think there will be a little bit of difference this time around, this bull market.
This is Reimagine 2020 version 4.0, Tales from the Crypto. We will be airing this on Halloween. So Joe Sass, tell me, what is the scariest crypto story you have?
Ooh. Wow, that's a tough one. The first thing that comes to mind is crypto Twitter getting doxxed, arguing with these shitcoiners and all these people who keep saying that their thing provides real world, use cases, and Filecoin, Eric Vory, so I would say my scariest thing was one time I I picked at a hornet's nest, and then someone sent me a message from a private group of that cryptocurrency, and what they were doing was they were trying to find out where I live and find out everything about me, and that was probably you know, that was you know, that was you know, Second Amendment life for a little while.
Yeah, yeah. I listen. You need more than that ukulele in the background to protect yourself, and America does give you that right. You also have those boxing gloves there as well. Yeah, listen. It could be crypto Twitter is a wonderful, interesting place, but also a really shows you some interesting people, some dumb people, some smart people. It's a wide range of gambit.
Yeah.
I try to not step on toes, but I know that you have a more abrasive approach. Let's put it that way.
Yeah.
Yeah.
I'm mean.
Yeah.
I'm a toxic motherfucking Bitcoin like asshole maximalist. To me, this is a revolt without a single bullet needing to be fired. And everyone that is cluttering that ability for this beautiful asset to change the world, they are my enemy, and I will treat them as such. And so just to be more specific, I think it was actually both me and Tone when we went after token pay and essentially annihilated token pay. With some facts that we had recovered, a couple people even gave us death threats. So that's probably one of the darkest crypto stories I have. But yeah, you know, there's just, you know, some typical banter going on most of the time in crypto Twitter. It's not normally that bad.
All right. Well, Joe, I do appreciate you taking the time to speak to us. There are Ghosts of Tsushima to play and Cigars to Smoke. So I do appreciate you kind of giving our viewers a little bit insight into the life of a crypto trader. I don't have the balls to do it, to day trade it like you do. It's just too wild, too volatile, too crazy for me. But kudos to you for really doing it and explain to us kind of how it works in your mindset. So, Joe, as always, a pleasure to speak to you. And for all our viewers at Reimagine 2020, I'm Yonah Hochhauser. Thanks for watching.